Knowing how to read and analyze your income statement or profit and loss report is not only important, but it could be critical to the success of your small business. Understanding how your business is performing financially will prompt strategic decisions and meaningful operating goals for the future of your business. It will tell you if your business is profitable or not, and where you could work on cutting costs, or maybe you need to make a shift or pivot your business to turn your business from operating in the red or showing a loss to operating in the black or showing a profit. It doesn't matter if you're doing your bookkeeping with a manual bookkeeping system, such as using a spreadsheet like Excel or Google Sheets to do your bookkeeping, or a computerized software system like QuickBooks or QuickBooks Online. You'll still be able to generate an income statement for your business. Whether you're a solopreneur, entrepreneur, small business owner, a bookkeeper with an online virtual bookkeeping business, or a virtual assistant looking to add bookkeeping as a service to your existing business. Listen into today's episode, and I'll make sure that the next time you're having a conversation about income statements, profit and loss reports, or P&Ls with your colleagues, you won't feel intimidated, left out, or confused. You'll be able to speak with confidence, knowing exactly what they're talking about, and most importantly, you'll know exactly how your own business is doing, because you'll be looking at your income statement with confidence, knowing your numbers are correct. You're listening to the Mastering Your Small Business Finances podcast, where we get straight to the point on topics that ultimately affect your bottom line. That's right, as an entrepreneur with a small business, money management, growth, marketing, they all affect your bottom line. I'm your host, Chris Ponick. I'm a certified public accountant, and I've been helping small business owners like you navigate and easily understand these complicated topics for over 25 years. I'm a wife, a mom, a grandmother, and a small business owner myself, so I know your time is valuable. In my free time, I make the best sugar cookies and have mastered an amazing chocolate chip cookie recipe. And that's not just my opinion. You're in the right place. I promise your time will be well spent here. Each week, you'll gain confidence and clarity while making a successful impact on your business and grow your bottom line. Get comfy, grab a cookie, and let's get straight to the point with this week's episode. Are you looking for a computerized software solution to do your bookkeeping? I highly recommend checking out QuickBooks Online. I've been using QuickBooks myself for over 20 years, and they really know how to streamline processes and make your bookkeeping and recording your transactions simple and easy. QuickBooks is one of the top software solutions used by small business owners, and I would say that over 95% of my clients are currently using QuickBooks for their businesses. One of the features most of my clients and I take advantage of is the option to set up bank feeds. You simply link your bank account to your QuickBooks account, and QuickBooks will automatically import each transaction into your QuickBooks file. You'll save a ton of time not having to manually enter each of these transactions. You simply review each of the transactions and make sure they're getting recorded to the appropriate account, and then click one button and they're in. Want to know more? Head over to financialadventure.com/QuickBooks and learn how you can save 50% off of your first 3 months. Welcome back. When you want to know how profitable your business is, or how much net income or loss your business has made for a certain period of time, you want to look at your income statement. It's also called your profit and loss report, or even your P&L. Your income statement takes into consideration all of your income and expense transactions and summarizes them by account. It shows your revenue or your sales minus your expenses, giving you a net income or net loss for that specific period of time. The most popular periods of time would be either quarterly or annually. So let's dive into what an income statement tells you, and we're going to start at the top. Your income statement will show all of your revenues or sales at the top of the report. These could be listed in one generic account, such as sales, Or you could have each of your income-producing streams listed as a separate revenue account and summarized as your total revenue. Next, you'll see your cost of goods sold, or sometimes it's referred to as COGS or COGS. These are all costs that are directly related to producing the goods or services that you sell in your business. Cost of goods sold are normally made up of items such as materials, labor, packaging, and shipping. Your gross profit is calculated by taking your total revenue amount and subtracting your total cost of goods sold. This amount tells you how profitable your business is before taking into account any of your overhead or other expenses. You should always have a positive gross profit amount. If your business shows a negative gross profit amount, you'll need to look into each product you're selling and make sure you're selling it at a price that you are not losing money. This is why, when you're setting your selling price for a product, you need to consider all the things that go into selling that product, or your cost of goods sold. If you have a negative gross profit amount, you will never have a net income. And since we're all in business to make money, you definitely want to ensure your business is showing a positive gross profit amount. The only way to increase your gross profit is to either have more sales or decrease the amount of cost of goods sold that you have. Next up are your operating or general expenses. These expenses include items such as rent, office expenses, utilities, bank service fees, interest, advertising, and telephone expenses, just to name a few. You'll normally list these separately so that you can easily see how much each of these items are when you quickly glance at your income statement. Like I mentioned above, the only way to increase your gross profit is to either increase your sales or decrease your cost of goods sold. Similar to this, the only way that you can then increase your net income would be to take this one step further and try to decrease your operating or your general expenses. And lastly is your total net profit or loss. This is commonly referred to as your bottom line. Why? Well, because it's actually the bottom line of your income statement. This represents the total net profit or loss for your business as of the period of time that you're referencing. If you're using a computerized software system such as QuickBooks, you can easily customize your income statement to compare your current income statement to another period, such as a prior year or a prior quarter or even a prior month. This is done with a few clicks, and before you know it, you're comparing your income statement to another period of time. So why would you want to do this? It can actually help you gauge how your sales are doing, or even if you have certain expenses that are extremely higher in one period than another. It will help you dig deeper to see how your business income and expenses are trending, and if there's anything you should be changing as you move forward in your business. Your income statement is one of the top 2 financial reports that you should be reviewing on a consistent basis. We talked about the balance sheet in last week's episode. If you haven't listened to it yet, I strongly suggest you go back and listen to it. So why is it important to look at both of these reports together? If you don't have the numbers correct on your balance sheet, there's a very good chance your numbers on your income statement are wrong as well. These 2 reports go hand in hand with each other. Let's take, for instance, if you have a line of credit with your bank. Like any line of credit, you would receive periodic advances, and you'd be making payments on this line of credit throughout the year as well. If you don't reconcile or make sure that the ending balance of this line of credit is correct each month, or at the very least at the end of the year, you may be over or understating your interest expense. When you make a payment for your line of credit, part of this payment would be the principal portion, which would reduce the line of credit balance, and the other part would be your interest portion. The principal portion of the payment is reflected on your balance sheet and would reduce the line of credit balance. The interest portion of your payment increases your interest expense, which is on your income statement. If you don't record your payment correctly, your line of credit balance would be over or understated and would cause your income statement to be incorrect as well. If you recorded your full payment to your line of credit, for example, and didn't record any of your interest expense, you would then be understating your interest expense, which would be overstating your net income, since this interest would never have been recorded on your income statement. If nothing else changed and you took this information to your tax preparer and they only looked at your income statement, you would be overstating your income by that same interest amount. Let's get this straight. We never want to overstate our income when we're preparing our tax returns, right? We want to make sure our numbers are correct and we're reporting the correct taxable income. I know this can be complicated, and my goal here with this podcast is to really try to simplify all this information. So, to summarize this example, you want to make sure that you're checking all of your balance sheet amounts to ensure both your balance sheet and your income statement reports are reflecting the correct amounts. You can see from this example just how your balance sheet and income statement are linked together. Every entry you make in your bookkeeping system needs to balance between the balance sheet and the income statement. You'll see in the equity section of your balance sheet a line called net income or net loss. This is the bottom line from your income statement, and it's another way that you can quickly see if your business is generating a profit at a certain point in time. One more thing. Make sure you check out the additional links for this podcast where you can grab the 5 essentials for stress-free bookkeeping and the online virtual bookkeeping business starter guide. Both are filled with important and actionable information to help your small business, and they're listed right where you listen to this podcast. I'm also looking for a few accountants and bookkeepers interested in giving me feedback on an upcoming opportunity. If you'd be interested, I have a link in the show notes for a founding member opportunity just for you. And you know you can always go to financialadventure.com or email me at info@financialadventure.com for more information. I personally respond to all of my emails. All right, to recap this episode. Number 1, when you want to know how profitable your business is or how much net income or loss your business has made for a certain period of time, you want to look at your income statement. It's also called your profit and loss report or even your P&L. Number 2, your income statement will show all of your revenues or sales at the top of the report. Number 3, your cost of goods sold are all the costs directly related to producing the goods or services you sell in your business. Number 4, your gross profit is calculated by taking your total revenue amount and subtracting your total cost of goods sold. Number 5, if you have a negative gross profit amount, you'll never have a net income. You definitely want to make sure your business is showing a positive gross profit amount. Number 6, your operating or general expenses include items such as rent, office expense, utilities, bank service fees, interest, advertising, and telephone expenses, just to name a few. Normally, these items are listed separately so that you can quickly see how much each of the items are when you look at your income statement. Number 7, after calculating your gross profit, the only way to increase your net income would be to try to decrease your operating or general expenses. Number 8, your net profit or loss, or your bottom line, represents the total net profit or loss for your business as of the period of time you're referencing. Number 9, if you're using a computerized software system such as QuickBooks, you can easily customize your income statement to compare your current income to another period. Number 10, your income statement is one of the top 2 financial reports you should be reviewing on a consistent basis. Number 11, look at both of these reports together. If you don't have the numbers correct on your balance sheet, there's a very good chance your numbers on your income statement will be incorrect as well. And number 12, you'll see in the equity section of your balance sheet a line called net income or net loss. This is how your balance sheet and profit and loss are linked together. And you know I'm going to ask, what's at least one thing you'll take away from this episode that will help your business succeed and grow your bottom line? If you need some accountability, join our private Facebook community and post your action item. We'd love to support you. Thanks for taking the time to tune into this episode of Mastering Your Small Business Finances. If you enjoyed this episode as much as I enjoyed creating it for you, I'd love for you to give it a 5-star rating and subscribe to the show so you never miss an episode. Visit financialadventure.com for the show notes, links from this episode, and while you're there, leave a comment if you have a topic you're interested in learning more about that affects your bottom line. If you're looking for a community where you can ask questions and get feedback about your small business, join my private Facebook group. You can find the links to this group and more on financialadventure.com. And remember, any financial information shared on this podcast is not to be considered professional, financial, or tax advice and should not be solely relied upon. Please consult your CPA or tax advisor for an opinion on your specific circumstances. I'm looking forward to having you tune in next time. Until then, dream big, follow your heart, and love what you do.